My name is Jamaal Solomon. I will be doing dual responsibilities today. I will be the host and the presenter. So I don't know how that's going to happen, but like I said, last week team did a great job. They talked about real estate. It was a team effort. So now I feel like I'm the solo. So now enough respect to all solos. I have empathy for you guys now, but I'm gonna make it happen for this time. But I appreciate my LB. So we're gonna keep it moving. So guys, listen, this is the second installment of the Keep It in the Family series, and it's all about protecting your assets. Like I said, last week was real estate, great conversation. This presentation is going to be about taxes, and next week is going to be about insurance, which I am super excited for because the speaker just knows too much stuff about insurance, and I just want people to see him talk about it. And the whole goal is, during this pandemic, we just learned that, especially within our community, we got to do a better job of learning how to keep our assets, grow our assets, because a lot of people thought they had it good, especially business owners, and they just wasn't prepared. And as a tax accountant, and now as a person that works in the insurance world, I just really saw the need to teach people the basics about how to protect their assets, how to maintain it. So when the next time something like this happens, we will be prepared. We won't lose property within our communities. We'll keep the properties within our communities, and we're going to just make it happen. And like I said, today is going to be about taxes. You may not think like, oh, what does taxes have to do with keeping your assets and maintaining your assets? What if you owe the IRS money? Do you know that I represented over 200 people in front of the IRS? And, I dealt with people that had six-figure tax debt, and I always like to tell people I had never dealt with a millionaire or billionaire. So six-figure, I dealt with nurses, teachers, doctors, just normal, people that had the six figures. And if they would have just knew the basics, they wouldn't have that problem. They wouldn't have the liens. They wouldn't have the wage levies. They wouldn't have none of that stuff. So that's another aspect of protecting your assets. And another one is just knowing the basics about taxes. When I talk about taxes, I'm not trying to make you an expert. Believe me, I'm not trying to make you an expert. However, when you go to your tax accountant, you got to at least know the minimum. Don't go in there ignorant and say, you know what, I trust this guy because he has a fancy title, because she has a nice office and stuff like that. Because you know what? Most of these people that got in trouble, they trust their accountant way too much. And if you ever saw any of my functions or my speakings, I'm very passionate about you interviewing your tax accountant, making sure that y'all on the same page, making sure that when you sign your tax return, that nice little line that you sign, it basically says, if you haven't noticed, that you understand everything on that tax return to be accurate and true. So if something happens and you want to play my tax accountant did that game, it's not going to work. Why? Because you signed the tax return. So don't ever let a tax accountant rush you or say, oh, it's tax season, just sign it. Just be happy with the tax refund. All right. So we're going to go into that. And I think for the first 10, 15 minutes or so, I'm just going to do a presentation because there's some stuff that I just need y'all to know. But then after that, if you know me, I'm all about engagement, and we're going to have a Q&A. And this is not the workshop to be shy, because I'm a firm believer that we can all learn from each other. So I hate workshops that you just listen to the speaker and hope you get what you want. Be prepared to ask very much good questions, and we all going to learn from each other. All right. Before we begin, I would like to thank our sponsors. The first sponsor is the Queens Alumni Chapter, Kappa Alpha Psi Fraternity Incorporated. They're located in Queens. They do a great job. Whether you Greek or non-Greek, definitely check out their website, their IG page, because they do a lot of great stuff in the community. And they always looking for donations. They always looking for people to support their events. And I could attest, since I'm a member, the money goes to great causes. They have great impacts on people, family, kids. So definitely, I want to encourage y'all. If you're on IG, go follow them. If you just want to be on their mailing list, go check out their website and their Facebook page. My beautiful company, J.S. Tax Corporation, we are a virtual tax company. We deal with clients all over the country. We represent people in front of the IRS in any state tax department in the United States of America. We do bookkeeping. We do everything that your heart desires. If you want to go into that website, Tax and Forget It. Also, I do a lot of tax tips on my IG page, and we got a dope newsletter. So if you want to be part of my newsletter, I do a weekly and a monthly newsletter. Yeah, you'll be educated, and it's free. I'm not going to charge y'all, and you don't have to be my client. So all you guys say is, "Hey, Jamaal, just put me on that newsletter list so I could grill my tax accountant." And finally, our third sponsor, we'd like to thank the Boyd Agency. They're located in Queens Village. I'm also work with the Boyd Agency, and the owner, Garland Boyd, he will be the presenter next week. Listen, guys, I'm excited. I've been working for him for maybe 4 months, and I always like, Boyd, man, you need to go on a national circuit because your knowledge is so crazy about insurance. People really need to hear you talk. So listen, guys, whether or not you RSVP last week, take my word that you will want to see Garland Boyd talk next week because he knows everything that has to do with insurance, and he has over 30 years of experience. So you can't have assets and not have it protected. So let's just keep it real. So he's going to teach you how to protect your assets and what you need to know. Myself, what you need to know about me. You know I hate bios. If you want to contact me, Jamaal at J.S. Tax Corporation. My insurance email is jamal@allstate.com. My business number, 516-727. And if you want to have my insurance business card, digital, just text Boyd to 36260. And let's just make it happen. The two always get to me because Garland Boyd, he has one. So now I feel like I'm behind the line, and I don't know. Maybe I have to talk to him about that too. So guys, let's get straight into it. So before I go into certain type of tips, I wanted to go into stuff that, due to my experience, over 15 years experience, I know that a lot of people don't ask these type of questions, but they need to know it, right? And I like to call them the unsexy but necessary tax tips, because social media don't really talk about it. You're not going to see the tax accountant that's in the jet and in the fancy. You're not going to see the people on social media. You ever saw those tax accountants, for some odd reason, they in a private jet and they saying, "Yo, you could deduct this. I got $1 million clients." I call this unsexy because they're not going to talk about this, but every person that I help, they need to know the basics of this, right? And it's unsexy. I like to call it the Atlantic City of taxes, because Atlantic City, if you've ever been there, nobody brags about Atlantic City. Like, Atlantic City is there, exists. However, everybody probably went to Atlantic City once upon a time in life, and sometimes you need that quick trip. We need to know about it. So this is like the Atlantic City version of tax tips. So the first thing that you need to know, we're going to go over 2 of these. Always know that you have rights. A lot of people that I represent in front of the IRS or any state tax department, they feel scared. Not all of them, because they feel like they don't have hope or anything like that. And that costs a lot of money. For example purposes, I dealt with a lot of people that they just got used to just receiving a lot of IRS notices, because they like, you know what? There's no options, there's no hope. And all that does, that just accumulates your interest and penalties. Because when you start getting those IRS letters, it is time to be proactive and go talk to your tax accountant or anybody that's going to represent you, because you got to see it as every month they charging me interest and penalty. So you can make all the money in the world. If you get to a certain point and you're not responding to those letters, that's how it gets to 6 figures. That's how now on your retirement years, you got to pay back this the debt to the IRS. This is how they will take your home equity. This is how next thing you know, your boss is like, "Yo, man, I got to respect this wage levy that I got from the IRS." So you need to be proactive, but have the courage, the strength, the knowledge to know that you have rights. And this is not me just preaching. This list is actually on the irs.gov website. Every IRS agent knows about this. So this is not Jamal's just saying this. You have the right to be informed. Basically, you need to know about your tax debt. If there's a debt out there for you, you need to be aware of that. You have the right to quality service. I know popular belief is that the IRS is evil. They're the worst to talk to. But let me tell you something. I talked to hundreds of IRS agents, and 99.9% of them are very nice people. Very nice people. I know you might say, nah, nah, nah. Just think about it this way. They have a job to do. It is not their fault that for some reason you got a particular situation. If you want to be mad about, how high taxes are and stuff like that, I know people hate me to say this, but the politician makes the tax laws, right? Always remember, always remember that the IRS just enforces it. When you call the IRS, don't take your frustration out on them. They just doing their job like us. If you talk to them respect, I guarantee you they'll be nice to you. Now, if you're dealing with New York State, that's a whole different story. Those mofos are mean, but let's not even get to that. The right to pay no more than the correct amount of taxes. You'd be surprised. Sometimes the IRS is wrong. You got the right to amend it and defend it. The right to challenge the IRS position. You have the right to state your case. As long as you do it in a timely manner and you meet the deadlines, you have that right. You have the right to appeal. Just because the IRS says you owe 50,000 doesn't mean you need to take it up right off the bat. You just got to be able to approve it. Finality, that means, hey, once you say this is the debt, it is the debt. You can't be changing it on me or for any other reason. Privacy, the IRS cannot go tell your tax issues to other people and make you a story, unless you like Wesley Snipes and you're just trying to like really force them to do it to you. But other than that, privacy, confidentiality, you can talk to them honestly. They're not supposed to be telling your business. A right to retain representation. Listen, guys, this is very important. Please, if you have big tax debt, please don't just talk to the IRS by yourself. Hire someone like myself or somebody to do it for you, because listen, the worst thing you could do, they're nice, but the worst thing you could do is just go in there uninformed and all that stuff. They will pounce on you, right? So talk to a representative and you have that right. If the IRS comes knocking on your door, you have the right to say, you know what? I have a power of attorney. Talk to my accountant, talk to my attorney. Once someone has a power of attorney for you, the IRS cannot forcefully talk to you. Remember that, because they could get you and kind of force you to do stuff. So that's very powerful in protecting your assets. And the right to a fair and just tax system. If you ever been on the phone with the IRS and you just so happen to be dealing with like the IRS agent from hell, you have the right to say, hey, you know what? I want to talk to your manager because you're wilding out right now and I don't like where this is going. So listen, guys, go to irs.gov, look at these rights. They go into detail of it. I'm not going to go into detail of it because we want to go to Q&A. All right. Unsexy but necessary tax tip number 2, settling your tax debt. Listen, guys, when you owe a tax debt, I know it's a mental torture for a lot of people. And I could tell you stories that y'all would not believe. I had people break down and cry on me. I saw marriages get destroyed. I saw people health go down because, when you see that 5-figure tax debt, you're like, man, I don't know how I'm going to pay this. But here's the powerful thing I'm going to tell you how to protect your assets, because y'all know that if you haven't known, the IRS is very powerful. They could take your home equity, whatever equity you have in your house. They could take your wages. They could go into your bank account. They could do all of that, right? But here's the deal. I used to work for one of those big tax resolution companies that during tax season, you hear them every month. Oh, you could do this. We could do offer and compromise and all that stuff. I used to work for one of those companies as an independent contractor. Here's the biggest secret. What they do is they hire people like me. So yeah, you may be paying triple the amount just that so-called have these expert companies deal with your tax return, but all they do is farm it down to people like me. So when I talk to people and I tell them about the options, less expensive than those big bucks, people don't respect it. Like, nah, you don't know what you're talking about. You don't know what you're talking about. And then they go pay triple the amount of price just to have someone like myself tell them exactly what I told them, guys. And listen, offer and compromise, get that out your head. Get offer and compromise out your head. Out of all the cases that I did, maybe for the IRS, only 2 of them was offer and compromise. And it was a guy that owned 100K and I got it down to $1,000. You know why? Because his father died at the same age that he died. His ex-wife took all his money. He didn't have a place to live and all that stuff. And you know what I had to do? I had to prove all of that to them. And that's the only reason why I went down to it. So long story short, to qualify for offer and compromise, I'm going to keep it as real as I can. You got to be crazy old, crazy sick, and you have to have a depressing story. It's not no, oh, currently I don't have a job. It can't be, oh, for the last 2 years, things be bad. Nah, that's not going to work in an offer and compromise, especially if you're in your 40s or your 50s or even 60s. That's not going to work. And healthy, it's not going to work. Here's what you really need. This is how I save people tens of thousands of dollars, but you will never hear it publicly. Partial payment installment agreement plan, and also currently not collectible status. If you're ever in trouble, look into partial payment installment agreement plan, currently not collectible status. All this other stuff, I'm not going to go into heavy detail because you're going to simply go to the irs.gov. But partial payment plan is, let's say the IRS wants $500 from you per month for you to get into your installment agreement plan, right? Now you may be thinking, dang, I don't have $500 a month to get in. So now they're going to come after my wages and attack my assets. No, 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 no. There's a form called Form 433 that if you go to them, it's a financial and it tells you how you are currently. So they'll ask for your pay stubs, they will ask for your assets, what's in your bank account. They will ask how much is your retirement account and how much home equity that you have. And let's say due to this form, because it's an IRS formula, it shows that you could only afford $125. They will take the $125 for up to a year. Now, let's say your situation doesn't change. That's how you save tens of thousands of dollars, because the IRS only has 10 years to come after you. So if you know that in order to pay off your debt within 10 years, you need to pay $500, but you keep on using that form and it's $125, do the math. That's how you spend, that's how you really, really save tens of thousands of dollars. And I have done that hundreds of times. I did a offer and compromise 2 times. I did the partial agreement hundreds of times, and it works. And one time I saved this guy $40,000. So I called him, I'm all happy. I'm like, yes, I saved him $45. This guy had the nerve to tell me, oh, that's all you saved me? I could have done that myself. I'm like, no, you couldn't have. That's why you hired me. So be humble, guys. Don't be acting like the IRS owes you something. It's not really that case, but you got to know your options. And the second option that I really want you to write down and know, let's say you owe money, right? And let's say for some reason, due to the pandemic or health reasons, let's say that you was down on your luck and you was just you just haven't had a job, or now you have a part-time job or a part-time gig, right? Currently collectible status is the same thing as partial payment, but let's say that the IRS wanted $500 a month from you, right? But the formula shows that you can't pay them no more money at all. The formula shows that maybe you're at -50, -25. So they will accept that you can't pay them money. Here's the beauty of it. The statute of limitations still continues, right? So now that year that they wanted $500 a month from you, now they legally will take $100 from you, and they're not going to do no wage levies. Your assets are completely protected for that year. But every year you got to renew your financials, right? Because just think about it. What if you qualify this year, but last year you played the numbers and now you're a millionaire? So the IRS is not going to allow you to do that for 10 years. They want to see an updated financial, and you just got to call them and stuff like that. With stuff like that, go to an representative that's that knows that type of stuff. But also, don't be fooled by these major tax resolution companies. Always remember, they go to the little guys like me, and we the guys that kind of do it. We get 1099s to handle those tax cases. All right, so keep that in mind. Don't disrespect the little guy. Just because a company has a big marketing budget doesn't make them the best option for you. And do not get fooled by these offer and compromises dreams. Offer and compromises is a way for you to call them, because they know once you hear offer and compromise, you're going to start calling them. And once you drop that deposit, they got you. Trust me, I got behind the scenes knowledge on it. Now let's get to the sexy part. Now that we got to the Atlantic City type of tax tips, let's quickly go into these top legal ways to cut your taxes. There's other ways, but due to my 15 years of experience, I feel like these are the ones that, unless you have a unique situation, at minimum, you should be taken very, very seriously. Hopefully, everybody that has a 401k, especially from their job, hopefully you're taking advantage of that, because as you should know, it does reduce your taxable income and it can grow tax-free into retirement. However, with this, if you're going to use this option, I highly recommend that you talk to your financial advisor, and B, a tax accountant, and have them work together, right? Because at the end of the day, you just don't want to do this for a tax deduction, right? You want to be smart about it. You're thinking about your assets. You think about reducing your income and taxable income, stuff like that. But at the end of the day, it has to make sense for you, right? Just don't get into a 401k plan. Don't know what the hell is in it. You're just doing it just so you can get a deduction. But when it's time to retire, you're like, oh my God, this is what I had? This is horrible. And I just did this for a tax deduction. So that's why I really highly recommend that it should be a team effort, at minimum 3 people, you, a financial advisor, and your tax accountant. And don't be scared to have them all in one email. I have clients that do the same thing. Real story, someone attached me to their lawyer, their representative, I think their insurance person, and this person put them all on the same page. And that's the best thing that you could do, because everybody don't know what you want to have. Everybody be team you, right? Just don't have people push stuff on you, especially when it has something to do with your retirement. And like I said, people, if you have questions about this, I guarantee you we're going to have a great Q&A. So hold it for the Q&A and we're going to make it happen. Did you know, and you know what? From all my years of doing this, nobody has ever done this. Nobody. I don't know whether or not it's just lack of knowledge or lack of maybe you need to really be rolling in the dough to maybe do this. But this is a good thing, right? So I know a lot of y'all may donate to charitable organizations. Think about donating to my organization, because my not-for-profit definitely needs it. Let's say that you have stock that is appreciating in value. Now, if you just sell it and then you say, okay, I'm just going to give a profit, a portion to charitable contributions. When you sell it, that's going to be a taxable transaction. But what if you do a donor advised fund, financial advisor, don't be asking your tax accountant to set that up for you. And then what you do, you put your stock sales in that donor advised fund, and then you donate it, right? So now it's not taxable. And now you get an extra, especially itemized deductions. If you do that, now you get a charitable contribution deductions for it. So it's like the ultimate win-win. But with that, like I said, I have never had a client that try it. Hopefully before I retire, which is God willing, no time soon, someone might challenge me and say, you know what, Jamaal? Yo, I talked to my financial advisor. I got this donor advised fund. Let's use this bad boy. So think about that. But like I said, team effort. Just don't go to your financial advisor. Just don't go to your tax accountant. Team effort, at minimum 3 people. You, your financial advisor, your tax accountant. Let that be the theme of today. And also, your insurance person. We're gonna don't disregard the insurance people, because there's a lot of tax advantages and all this stuff, and investment assets. And I'm pretty sure Garland is on the chat and he might be busting out tips and stuff like that. Include your insurance agent. A lot of people don't do that. Don't be ashamed to include those at minimum 3 professionals, because at the end of the day, if you want to increase your assets, it's a team effort. You can't separate the professionals in your life. That's supposed to get you to a certain point. Because a lot of times I have clients that would do something, they would do something with their financial advisor and tell me like April 15th when it's already too late. And I'm like, yo, I wish you would have told me that when you thought about it 6 months ago, because I could have saved you $10,000. Because I could have told you like, oh, that's not the thing to do, because your tax bill is going to be real, or you need to take out this amount of taxes and all that other stuff. So, all right, side hustle. It's the new sexy thing. Pandemic has made, I think, what is I forgot what the term is, that everybody's quitting, a lot of people's quitting their job and resigning and doing side hustles and main hustles and stuff like that. So that's the big thing right now. But people been doing it for decades, centuries, right? But a lot of times, sometimes people might say, "Oh, is that going to hurt me? I can't prove the deductions and the audit." No, 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 no. Have that talk with your tax accountant. And if you have a legit side hustle, I hate when clients come to me, thinking a hobby is a side hustle. Don't even try it. Don't even try that side hustle, that hobby thing with me. Somebody once told me, one of my clients, like, "Oh, my bowling." I'm like, "You're not a professional bowler. You're just having fun. You're doing your thing. I am not putting this on your tax return, because if you ever get audited, you're gonna have to pay all the money back with interest and penalties, and you're gonna hate me. So don't even try it." And if you have a tax accountant that say, "You know what? I know this is a hobby, but I'm gonna deduct it as a side hustle," I highly recommend you leave that tax accountant. And you may think I'm a hater, but with all these tax cases that I have from other tax accountants that got these people in trouble, like I said, if it doesn't sound right, it's not right. Because at the end of the day, when these people, you think I was the first option that they came to when they wanted someone to take care of their tax debt? No, this is how it happens. I'm gonna tell you exactly how it happens. You deal with a tax accountant that you dealt with for all your life. He or she been giving you all these tax refunds. You never ask questions. The moment you get that tax letter, guess what happens a lot of times? All of a sudden, the tax accountant does not return your calls, does not return your emails. I had one person said the tax accountant wrote a sign on his office and said, "Yo, I went back to Africa." You may be thinking, "Oh, Jamaal, you joking? Nah, that's crazy." My stories sound crazy, but they are true. I don't lie about my tax stories. So that's why I'm saying, have it be legit. If you're gonna deduct a side hustle, there's so much stuff that you could deduct if it was legitimately for your business. And it's called the Schedule C. Have that conversation with the tax accountant, and that could definitely reduce your taxable income, right? Or if you're thinking about having a legit business, think about it. The IRS is not dumb. They know that usually your first 3 years or 2 years, you're gonna have a loss. So don't be scared that you're like, "No, you know what, Jamaal, I've just been setting it up, but I have a loss." That's okay. It's not okay when you're just having like losses for like 6 years straight with no income or stuff like that. That's when it becomes a red flag. So have that, especially Uber driving, gas, and stuff like that. There's a lot of tax savings within there. Home office deduction. A lot of people, I think it's one of the misunderstood tax deductions out there. If you're a straight employee, you cannot do it. That's over with. So if you're a W-2, don't even try to do it. But if you have a side hustle, if you're an independent contractor that get 1099s, think about this. However, please don't be aggressive. And I have some people that have studio apartments, and they like to tell me, "Oh, well, my apartment is small, so I use 100% of my studio for my business." You don't want to do that, because the IRS is not dumb. Nobody uses their apartment 100% for a business. Nobody. And you're just setting yourself up for failure if you need to go in front of the IRS and prove that, right? Having the computer at your your sofa doesn't mean the whole apartment is your thing. However, but let's say you do have a little section, maybe 10% of your apartment, your house, even boats, even with people that live in trailers. It goes beyond that, whoever you live. So let's say 10% of your house is contributed to use strictly for your business, and you pay $10,000 in let's say mortgage interest, right? You could have $1,000 deduction right off the bat, and you can still claim the other 90% on your Schedule A if you itemize, right? So that's another thing that you really need to look into. Like, yeah, everybody knows about the car stuff, but with the home office, let's be real. The percentage. Please don't say 50%. Please don't say 75%. You're just asking for disaster. And like I said, if you have a tax accountant that's going to do that for you, leave now, because I can guarantee you're going to get in trouble, and that person's doing too much aggressive stuff. Be realistic. Every dollar counts when it comes to cutting down your taxes. Be happy with the $1,000. Don't get greedy and go for the 10,000 only to get a letter from the IRS, and now you got to owe 20 more thousand. So think about that, guys, right? All right. Here's a fun one, right? That I think a lot of people kind of try to want to abuse, but be careful about that. Writing off business travel expenses, even while on vacation. I mean, that got to be the most sexiest tax deduction in the history of tax deductions. I mean, like, dang, I could get a tax deduction while being on vacation. Yes and no, right? Now, if you're just straight up taking your family to Cancun and you're just trying to deduct the whole vacation, nah, that's not going to work. However, let's say, for example purposes, you're trying to go to Florida or something like that, right? And you taking your family. But here's the deal. Always think, like I always tell my clients, and my clients probably always know this, always think that the IRS is going to audit you the next day. What are you going to say to them? Can you really prove it? Right? It's like being in high school. Remember back in high school when we used to talk to each other? Because right now my son is in junior high school and I'm hearing all they on the phones. Remember that time when you said a story in front of the lunch table and everybody called you a liar, not a liar, liar. Like, nah, that wasn't true. What did you have to do? You had to make a statement. You had to show receipts. You had to make it happen, or they're not going to take you seriously. That's the same thing with the IRS. Yeah, you can say anything in the book, but at the end of the day, if they're in front of you calling you a liar, do you have the proof to prove it? And here's how you can kind of do it. Let's say you want to take the Orlando vacation. Boom. Ooh, you're an insurance agent. There's a big insurance conference that's going on that same exact week. You know what you could do? You could take some time, register for that conference. Listen, the IRS is not going to check your timing. They're not going to be like, oh, let me see all the workshops you went to. All they're going to do is just look at the receipt. Oh, okay, you registered with it. Just makes sense. You're an insurance agent. Okay, boom, boom, boom. Oh, you're trying to go national. You met with potential clients. You met with a potential vendor. Oh, okay, that makes sense. I could deduct some meals and all the other stuff and kind of commingle with it. You had to stay in the hotel, deduct the hotel because you stayed there partially for the conference. Now listen, guys, I wouldn't recommend, I'm not telling y'all to deduct 100% of it. It has to make sense, right? I won't recommend deducting your wife tickets or your kids tickets. However, your wife sometimes is your business partner. Think about that. Officially, if your wife is officially your business partner, her tickets are deductible. It's off the hook. All right. And some people, you could hire your kids. Now it's an employee trip, but it has to make sense. If you're gonna try that, definitely talk to your tax accountant first. Just don't do it in April 15th. Say, oh, by the way, Jamaal, I use my credit card to go to Disney World. You know how it is. I'm gonna say it's business. And I'm gonna be like, yeah, I think you want to second guess this because this is kind of reckless, and I don't know if you really want that smoke. But at the end of the day, do know you sign it, you get that letter, it's all on you guys. And I think that's the most sexiest of the tax deductions of them all. I think the second most sexiest is not on this presentation, is potentially hiring your kids. Hiring your kids. Please mute your phone. Hiring your kids is one of the other biggest things too, but you have to do it smart. Don't, when you hear these social media posts about, oh, you can hire kids and get the deduction and boom, 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 that's half the story. There's a lot more stuff to do to make it happen, but it's worth it. All right, guys. So like I said, I'm super excited because now it's going to be the Q&A section. Y'all know I like interaction. All right. So who want to be the first one to ask a Q&A? And like I said, people, when you keep your questions to yourself, you're blocking your blessing and you're blocking other people's blessings. So who's going to be the first one? CK, what's up?
My question, I put it in the chat,
Oh, I didn't read it. Yeah.
No problem. Do you have any tips on property tax grieving to reduce the amount of taxes you pay there on your property?
Yeah, usually with that's usually with attorneys. So, and especially Long Island, because I know you
Yep.
moved out there. That's a humongous thing. And my in-laws, they do that every year and it saves them thousands of dollars, right? Because what I'm hearing is that the counties do be wilding, and with the school district budgets, yeah, your stuff is only going to go up. It will never go down. And sometimes they got their measurements, they increase your measurements of your house. So people, if you ever in that situation, especially if you live in the suburbs, definitely, there's tons of tax attorneys and people that, because they know that's a big money thing, but it's worth the money. That doesn't really affect your tax return, because let's say you do get it reduced. Now your tax deduction is reduced, because now you, instead of paying $15,000 a year on your schedule A itemized deduction, you got to reduce to 10,000. So that reduces your taxes. But at the end of the day, you got to think like, I got 5,000 extra dollars in my pocket, so now I can maybe invest in it. I could cut down some debt. So you got to see it like that. So that's a good question, CK. Thank you for asking. And what I like about that question is all about your mentality, is how you see taxes. I tell my clients, if you have that, oh, I want a big refund mentality, you're never going to take advantage of taxes, right? Because Jackson Hewitt, H&R Block, they brainwashed us, especially within our community, to think that tax refunds are a blessing in the sky. The bigger tax refund you get, you made it in the world. Let me tell you something. I'm going to be probably the rare person that's going to tell you this up front. A tax refund, especially if you're a W-2 person, only really meant that you gave the government interest-free loan on your money, and they gave it to you April 15th, and they're not giving you no interest-free loan or nothing like that. So basically, you overpay them, and they say, oh, by the way, yeah, you overpaid us. Here's your money back. So if you're really serious about growing your assets, if you're really serious about wealth creation, you got to get rid of that, oh, I want a humongous tax refund mentality. You got to think, how can I reduce my tax liability? That's how the wealthy, that's how the people that want to grow their assets, that's how they think. They don't come to me saying, oh, Jamaal, I'm looking for a $5,000 refund. They don't do that, because a lot of people, they will scream bloody murder, the high wealth net worth people, billionaires, and they get it off. Those people don't care about, they don't really get refunds like that. But they shielding a lot of income. You know what I mean? Ooh, okay, 3 participants. All right, so y'all know that I'm the host and the presenter. So whoever talks first, you got the mic. So the hand raising is cool. I see you, Nicole. Just whoever want to talk, go, and we go at it. So who's gonna be the next person?
Good evening.
Good evening. Who's that?
Albert Solomon.
How you doing, bro?
Doing well. How about yourself?
I'm all right. Can't complain.
Okay, so my question is with the tax deductions, do you need an LLC for this?
No, that's a misconception. A lot of people that holds a lot of people back. I love that you asked that. LLC is a strictly legal term. I know all the lawyers in here like, but it's a legal term. At the end of the day, the IRS, all they really care is that you're reporting your income and your expenses. They don't care if you're doing business as a DBA, which I really recommend to a lot of people starting out because it's a lot inexpensive. All they really care, you have an EIN number. EIN number is an employee identification number. Long story short, it's like your social security number for your business, right? Instead of giving vendors and clients your social security number, you give them the EIN number. So you just put that on Schedule C. So long story short, do not wait to get an LLC. If you really want to go for it, do a doing business as, you get the same exact deductions. There's no secret special LLC tax deductions. But a
And
lot of people that holds them back.
For the tax write-offs, would that follow the same as well, or?
Same thing. There's no special thing with. So whether you're a DBA or LLC, there's no special differentiate. So if it has anything to do with your business, you could deduct it no matter if it's a DBA or LLC.
Okay,
And
should we
LLCs are
also?
very expensive in New York. So if you feel like you in a profession or business that's not really going to get sued, do you really want to spend all that thousand? In my 15 years of taxes, I never had a client say, oh, Jamaal, I'm glad I had that LLC because it saved my business. Always remember, what's the first letter of LLC? Limited. So, yes, it could kind of potentially save you, but insurance could do the same exact thing. So let's say, for example purposes, and he's gonna preach this next week. You got sued by a client, right? And maybe you lost a lawsuit or something like that, or you made a big mistake. There's professional liability insurance that could save you just in case of that. So why have the LLC hold you back when all you gotta do is really get insurance and you're pretty much protected? But everybody, LLC is not really a tax term, is a legal term. The IRS only really cares that you're recording your income and expenses correctly.
Also, do we also need to keep our receipts for the payments as well, or?
Yeah, in case of audit, definitely keep it for at least minimum 3 years, right?
Okay.
And don't really give it to a tip to save money on tax accounting fees. Be organized. Do not give somebody like myself tons of receipts because I'm going to charge you accordingly. Use something like QuickBooks and allow me, what I like to do with my clients, I say, give me the P&L, and I'm trained to know if something looks off. And then I might say, hey, by the way, Albert, this number looks unusual. Are you sure? Where did you buy this from? The days of giving your tax accountant all your receipts, that should be done. We got QuickBooks, we got all this other stuff. You could just get on the report, but a good tax accountant will know what questions to ask from that report.
Definitely. Thank you so much. I appreciate it.
No problem. All right, Nicole, your hand been up since 6 o'clock and we didn't start. You want to say something, Nicole?
I don't know. I kind of got like two questions. The first
Okay.
one, for like the home repairs,
Mm-hmm.
I'm not sure, but you can you claim that like
No, it's a personal property now. Mm-mm.
all right.
Nah. The closest you could get is maybe if you get like energy efficient windows or solar panels. That's the closest. But if you're just trying to fix your walls or renovate your personal house, no.
Mm-hmm.
Now, if you have a rental property, you could deduct it for the portion for the renters, because a lot of people have rental property. They live in maybe one floor and the renters live in the other floor. It will
Mm-hmm.
only be for the floor that you're renting out. It won't be for the whole building. But that's a good question because a lot of people get mixed up with that.
Oh,
And
okay.
what's part two?
Well, part two was kind of that renter thing. So
Mm-hmm.
I know you have to claim like the rental stuff
Mm-hmm.
on you. I don't know how to say it
Nah,
without
just
saying
say it. Don't worry about it. Just say it. Don't even overthink it. Just say it.
Well, y'all don't got my last name up here anyway.
I
But
know a lot of Nicoles though. You good. We could call you Nicole Fisher.
there you go. No, all right. So basically, like the last few years,
Mhm.
you know, he told me like, okay, it's okay to, to put this rental, to put like, so I have somebody that stays in my basement, right? So he basically was like, yeah, just let's claim that. But I don't know. I'm like, should I claim this or should I not? But it's been helpful though. But I'm just like,
Mhm.
I don't know.
Okay, so
I,
since
I don't know how this stuff going. And I was kind of nervous. Like I never claimed this before. This was like 2 years ago, and I'm like, I don't need the IRS looking like she ain't never.
That's a
Oh,
wonderful question, and I get what you're saying. I believe you should do it. Because at the end of the day, most times you'd be surprised. Most times people get losses on their rental property. It's rare that I really see someone with a big property, with a big profit. And at the end of the day, you want to do the right thing because you never know. A lot of people think that just hiding certain stuff would never affect them. But let's say you want to you want to buy a bigger property. Um, just for example purposes, Nicole Fisher.
mm-hmm.
Let's say you say, you know what? Nah, man, I'm thinking big. I want to have a building. I want to get a bigger property and do rental and whatever. You may need to get a loan. You know what those loan people's going to ask you? They're going to ask you for your last like 3 years of tax returns and stuff like that. And you're going to be like, oh, no, 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 but I got income. I get rental income. They're going to be like, oh, but it's not on your tax return.
Got
And
you.
that's when that stuff really hurts you. So I say, guys, don't hire for stuff like that. I mean, yeah, and our community, you know how our community, and I'm going to try not to get into a rant, you know how our community got hurt out in the pandemic, especially small businesses? They did that, oh, I'm hiding income from my tax return. So when it was time for the grants and all that stuff, what those people asked for was your tax return. So when you say, oh, yeah, I'm making a certain amount of money, and those loan or those grant people don't see on your tax return, now you just destroyed your assets. You know how much businesses got destroyed because they couldn't get a grant or a loan because they was hiding income from the tax return. So now it went back to bite them. It's not worth it, guys. I'm not one of those tax accountants to tell you to hide because I've seen too many situations that, especially during the pandemic, that it hurt so much individuals and businesses. So do the right thing. Just file it. file to write the deductions, and you'll be fine. Just make it happen. All right.
Thank you.
All right. Who's gonna be the next person? I don't. Danny, what's up? You got
What's
the
up,
beautiful
Noop?
clouds.
All right, how you doing, brother?
I'm all right, bro.
Good, good. Listen, I had a question, but Nicole, she triggered my memory for another question.
Now, but it's Nicole Fisher though.
Nicole Fisher. All right, Nicole Fisher, I got you. Now, you had mentioned, she had asked about home repairs, and you said, nah, if it's energy efficient windows, that might be something different. But what do you like? You upgrade your furnace, you get an energy efficient furnace, energy efficient stove. Would that fall into that category as well?
I believe so. They have a whole list.
Okay.
I know it's kind of a change because the Trump years during tax returns was kind of crazy, but I believe they still have it. And don't think, people, that it's going to be the full amount. It's going to be like a percentage, like 10%, but every amount counts, right?
Absolutely.
Yeah. So they have a list. So all you gotta do, and listen, people, irs.gov is meant for you. It is, a lot of people's intimidated by it, but if you finally go to the IRS website, it's in plain language because it's meant for you to understand. So if you do energy efficient tax deduction, you will see the list, what to qualify for, how to qualify for it. So there's a list. It's just not windows or boiler, stuff like that.
Sounds good. And this is my main question I had.
Okay.
My son still has his business. When COVID hit, we had to shut it down for a bit, but we got it back up and going. And what I wanted to know is if I do his photography for his ads and stuff. So, if we travel to different locations, I'm taking his pictures. I got to make sure that he's clean cut, he gets his hair cut. He has other clothes on to look nice in the shoots and stuff. Does any of that qualify for like a tax?
Not really close, but here's the deal that you run into.
Okay.
You will have to show that he's paying you. So let's say your son hits you off with some money. It just can't be like, okay, I'm just doing this out of the goodness out of my heart, because then it's a hobby. You're just being a great parent.
Right.
But let's say he gives you a 1099, which he could deduct if he does a tax return. He could do that, and he could put it on his tax return. And most likely, he won't owe no money, anything like that, in his tax return, because standard deduction would knock it out. But it might make overall sense. So you got to have that conversation with your tax accountant. How would it look? Right? Will it really help me, or should I just be the good parent and just do what I do all the time? And in the end, it's going to help you out because it's a mentality. In the end, it's going to help you out because right now your son is ahead of the game. He's going to be making his money. He's going to, when you retire, he's going to, Dad, I got you. So you got to think like that. But now, with that, you're borderline kind of just being a good parent. So you want to kind of be careful with that.
So that wouldn't count as like an in-kind contribution or anything?
Nah, you being a parent. Nah, you being a parent. Yeah. But like I said, let's say he hits you off with some 1099 income, and you can say, oh, it's a loss. He pays me $1,000, but it's really $1,500 that he pays me. Whoa, you got a $500 deduction, and it's legit because from his business, he has an EIN number. He gave you a 1099. You got the receipts, and you're good. But don't do clothes.
Got you. And before I get off, I just want to say, listen, man, what you guys are doing is terrific. Giving, having a seminar, educating people. This is stuff that, people talk about, amongst their friends and stuff. You know how they always have something to say. They said I should do this. They said but here it is.
They will get you in trouble.
You got that right. And and here it is. We have the experts on the line that is giving advice and giving a presentation. And I just want to say you're doing a great job, man. Appreciate you.
I appreciate that. The words of encouragement definitely means a lot to me. So I appreciate those words. And I had one person, I spoke at one function, and this lady, she was like, you know what, my friends think I'm cheap because I'm doing this, and I have this mentality. I said, listen, ask yourself, anytime your friends or you get peer pressure from your coworkers or neighbors, ask them this one question. If I have a tax bill, if I have a credit card payment, are you going to pay it for me? Because if not, you need to shut the F up and let me handle my life and do it. So don't feel peer pressure, because this stuff is hard. It's hard to follow this stuff, but you're not the average person. If you follow these tips, you're not the average person. Guys, believe me when I say, if you follow these tips from the last 3 weeks, you're not the average taxpayer. The average taxpayer wants a refund. They do reckless stuff. It's just, but we're going to try to change the mentality, and that's hard. All right. So who's going to be the next person? I'm not really looking at the hands. So whoever talks first, let's get it.
Hey, Mr. Solomon.
How you doing?
Yeah, I had a quick question. So I wanted to know, do I have to report my crypto gains, even though it's a decentralized form of currency?
Oh, big time, big time, big time, big time. If I didn't say it enough. Do it now. A lot of people's gonna get caught out there because a lot of people been getting away with it, but the IRS is getting closer. And what's gonna happen is they're not gonna come after you. How they're gonna do it, just like how they do it with stocks and bonds, they're gonna go after the exchanges. And the exchanges are gonna want to continue to do business. So they're not gonna protect you. They're gonna give up your information. They're gonna tell you how much stuff you sold, how much stuff you brought, and you're gonna get this beautiful letter from the IRS very soon, and they're gonna be like, oh, by the way, congratulations on being a crypto millionaire. Yeah, you need to pay crypto taxes. And I've been preaching that for the past 2 years. I got this thing called Crypto J. People don't listen to me, but the pain is the IRS is getting very close, very close. The pain is gonna come real soon. So if I was you, be proactive because right now they don't have the manpower to really know the basis of your stuff, right? So you could kind of, you kind of work it to your favor, but you didn't hear it from me. But if you're gonna be reactive, say, nah, decentralized, they can't catch me. Don't play that game. Be proactive. Be like, oh, I already included my taxes. Just do it like that.
Got you.
Yeah, I'm sorry,
I
man.
got a question.
Yeah, two.
Somebody mute their phone unless you're trying to ask a question.
One for me, one for the wife, man.
Who's that?
Jamal, I got a question
Oh,
about
how you
lending
doing, bro?
money to a parent.
Huh?
I got a question about lending money to a family member.
All right, got you.
So if I lend $1,500 to my sister and she's unable to pay me back, is that a loss? Could I deduct that?
Oh, no, that's just you being a nice family member. Nah.
Are there any losses, like if you lend money to people,
on a business level, if you did kind of on the business level, you lost money.
No.
Nah, that doesn't.
No? Okay.
Nah.
I can't deduct it against my capital gains or anything like that?
Oh, no. Don't do that. Please don't do that.
All right.
Please don't do that.
Lending money or writing off losses when you lend money to
yeah, don't do that. Don't do that don't do that because that's what I was gonna say. That would be the world's biggest tax deduction if you could deduct loans from family members, unofficial loans, and put it across your capital gains and all that stuff. That'd be the IRS is not that nice. Don't play that game. But what I do tell clients in that case, if you do with a family member, have some type of contract that kind of protects you legally. I've seen people do that because let's face it, man. I don't know if I have family members on this, but I'm not lending them no money. It's probably only like 4 people in my family that I'll probably actually feel comfortable giving money to. Other than that, you're just gonna have to hate me. I'm used to it. It is what it is. Next person with their hand.
What if you're a student? What are some benefits when filing if you're currently a student?
Currently a student, most times when I deal with students, sometimes you're being claimed by your parent, depending on how old you are. Let's say you worked the job and they took out $1,000 from you. If you're being claimed, most likely they didn't really have to take out taxes from you. And a lot of students get tax refunds because the job that they work, maybe a side gig, they got it. But if your parents claim you, you can't deduct the lifetime credit or anything like that. So it all depends on if they claim you or not, right?
Yeah.
But
So what if Yeah, if your parents aren't claiming, you're working a professional job, and then you also
that's a different story.
So
there's something called a lifetime credit. So that means if you're doing like grad school or professional development, that's a nice credit. I think that's about $2,500. If you're undergrad and you're on your own, that's another credit. Most students, they don't have a high tax bracket, so they could do a lot of good things and not get heavily taxed. But the biggest thing in that situation are those credits, those education credits. And if you pay student loans, which you probably won't if you're a current student, maybe you have a past student loans, you could deduct that too. That's a nice deduction also.
Gotcha. Appreciate it.
Yeah, no problem. What's going on, Garland? You said you were supposed to say.
Yes, I have a question. Got a question. For those who have families or what have you, and they're have medical plans and with high deductibles and things like that with their medical plans. Talk a little bit about the benefit of having a HSA or a health savings account, and exactly how that can affect your taxes or how you can write off deposits into that.
I mean, I do a lot of that, but it's the way I explain it. I don't know. I could do a split fire explanation. However, I do have a lot of clients that they do take advantage of that, and if you use it, you could get a deduction. It depends on if he's self or family, but that's something that you definitely want to look into. As Boy says, if you do have a health savings account, that is a nice deduction, and a lot of my clients do get it, but you got to kind of use it right. Have that. Just don't do it and tell me April 15th, right? Because sometimes there may be rules. You have to sometimes use, you have to sometimes contribute. So you want to read it first from your employer, and B, ask your tax accountant, oh, do I qualify for this? Because it's a total different story if a client emails me like, oh yeah, here's the rules, boom, 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 boom. But when I'm trying to explain stuff in 30 seconds, I'm going to say, you know what, you should look into that. And that's another great. And funny enough, that was going to make it into my tax presentation, but I said, you know what, I didn't think it'd make the top 5, but that was like number 6 and number 7. So people like Garland said, who's going to be presenting next week, you got to go to his seminar. I guarantee y'all.
Thank you, Primo.
Look into health savings accounts. Yep. Anybody else?
See you tomorrow too.
I have another question. So to piggyback on the cryptos, so if you are holding the crypto for a very long period of time, maybe about 2 years or so, does that consider large capital gains or?
Nah. Don't look at it as large. Look at it as time wise. It's
Okay.
long term. This is the best way to look at it. And we're doing Spitfire. The IRS treats it exactly the same as if you sold Google stock, Apple stock. So when you sell regular stocks, is what you brought it for, the date, and all that plays a factor. So that's going to determine if it's going to be taxed at a higher rate or at a lower rate.
Cool.
So what you want to do is you want to hold, if you can, for at least a year and a day, just to make sure that it gets long-term capital gain tax treatment.
Thanks, man.
Oh, okay.
Right.
Thank you. I appreciate it.
Good night.
Anybody else?
I have another question.
Okay.
I was for the child tax credit.
Who is this? I don't see you. You like the voice right now.
Oh, this is Nicole.
Oh, okay. Nicole Fisher, right?
So now I believe you can claim up to $8,000. Is that correct? Because for one of my kids, I paid more than that for childcare last year. So am I gonna finally get all my childcare back?
No. No, I'm sorry. I'm sorry. No. And here's the crazy thing. And like I said, Spitfire people, so I apologize. I had people pay $40K in daycare expenses.
Oh yeah.
Daycare expenses. I was like, oh hell no, I love my kids, but I'm not sending them to Columbia at 3 years old. You could only it's only capped to a certain point. And you know what? If you're able to afford $40K, guess what's going to happen? The IRS is going to phase you out because they say that you make too much money and they won't get you the deduction. So just do it out of your kindness of your heart. If you qualify for it, more power to you. But do know that they will only give you a portion. And if it's private school is not going to count. Summer camp, yes. After camp, yes.
No,
Private,
this is
regular,
daycare. This is like
daycare, yes.
Daycare.
Yeah. So, but beware. I know a lot of people when they say friends and your friends is kind of doing it on the low, you got to kind of give a certain information, and sometimes that hurt them because you got to give up their information, and they may not be reporting it. So, I don't know if you're friending what type of level. You don't need to answer that, but
no, this is a legit daycare. Like,
okay,
licensed with the city.
Oh, so she's gonna give you a tax document. It's gonna tell you how much you paid a year, her EIN number, and just know that it will be a portion of it. But real quick, guys, child tax credit. A lot of people's gonna curse at me. You're gonna curse at your tax accountant. At the end of the day, it was an advanced child tax credit. So if you're used to getting that refund because you had kids, but you took that money like me, don't think about it like, oh, now I owe them. It's a penalty. It's an advance payment on that. So a lot of people's gonna owe money this year. Remember, you heard it from me first. But don't think about it as it's a penalty. think about it like, yo, the IRS already paid me that money. Whatever I did with it, I'm gonna dealt. It is what it is. Do not curse out your tax accountant. Do not curse out the IRS. It's an advance payment. You took it. Even if you didn't cash the check, it's still as if you took it. So don't say, I didn't cash the check. It's not gonna work. Cash the check, do what you want to do. Next question.
I took those payments, but
Nice.
is there a way to like, I mean, I'm a Schedule C self-employed. Would it possibly balance out with my, like, is there a way to balance it out? I'm probably not understanding, but is there a way to like balance it out?
Nah, the real thing to know is that it will affect your tax return, and it was an advance. So whatever happens, happens. You know, it's still the same thing, except you just took the money early. So if you have business deductions, you have business deductions. It is what it is. But do know, because I know it. A lot of people's gonna be mad, and they're gonna blame their tax accountant. All of a sudden, Jamaal sucks because now I've been getting refunds, but now I owe money. But at the end of the day, guys, be prepared and have that letter. Do not have a tax accountant that will disregard that letter that the IRS gave you that basically says, yo, we gave you $2,600. If a tax accountant does that, please leave that tax accountant, because what's going to happen, you're going to get a nasty letter after that. And the IRS is going to be like, nah, bro, we paid you money. You need to put that on your tax return. Anybody next? But thank you for asking those questions, because I wanted to talk about that. Yep.
Well, this is Dale. Dale,
the solar guy.
Yeah, I do solar.
Okay.
I want to get your opinion on the solar tax credits. How do you feel about those? Because sometimes someone will get the solar and then they're saying like their tax person says they don't qualify for it.
Well, like I said about Danny, well, he's talking about his the home improvements and stuff like that qualifies. There are certain rules, and I don't know the rules by heart, but somebody asked me, I know it. I know where to look for it, so it's not an issue. But there are a lot of rules to it, and I think the most thing that really discourages people is nowhere near the full amount. I think it's like 10% or the higher $500. It's a very low amount, so that kind of also discourages people. And I think that's why a lot of people didn't get solar panels, because that's not a very attractive tax deduction. Like, yes, you know, every tax deduction will help, but at the end of the day, it's very small. New York State also allowed people to do that, but it's very small.
Okay.
Yeah. So if people are gonna do solar power, do it, because, like I said, the mentality is gonna save you a whole bunch of money in the long run. But just don't think that I'm just not gonna do it because, you know, I'm not gonna evict the tax deduction. You're gonna save money on the other end, because at the end of the day, people, we're talking about protecting and maintaining your assets. The more money you can save, the more that you could, you know, get other assets and, you know, maintain your assets. So have that mentality. Get rid of that refund mentality, people. Get rid of it. Next question, or did I answer everybody's question?
No, I have a question.
Oh, you said no with an attitude. Who was that? How you doing?
Fine. No, my hand was raised, but I thought you were going to call names until I heard the, you know, shout out. I have a question about taking a percentage of money out of your stocks when you reach 71.5 or 72.5, whatever it is.
You talking about the required minimum distributions?
Yes.
Okay.
Yes. RMD. Do you know what that percentage is?
How you doing?
That's like more, I don't know by heart, but that would be a financial advisor. And I love that you asked that question, because the first time a retired person kind of gets that, sometimes they get into trouble because they think that they don't need to take out taxes and it's not taxable income. And sometimes they might owe money. So what I like to tell them, I don't know if you hear in the beginning, it should be at least 3 of us, right? Team U. Team U is yourself, your financial advisor, and your tax accountant. And the 4th person is your insurance person, but that's next week. And they should know what you do. So if you at that point, you say, you know what? I'm at the stage that I have to pick what distribution, what tax I gotta take out. Somebody, can you mute you? I know I'm not tech savvy and I can't mute everybody. Have that conversation with your tax accountant first, and your financial advisor is the first person you should talk to.
Okay.
And then from there, I say, oh, okay, yeah, you know what? Based on your last year tax return, you are at your effective tax rate was about 13%. So you know what? Take out 15% federal and you be fine. So don't worry about it. That's the way to think about it.
Okay. But I'm supposed to withdraw it and give it away, not pay taxes on it, correct?
Nah, that's taxable.
Okay.
Yeah, it's taxable.
Okay. Okay.
And maybe there's 1,000 financial products. Maybe there's a financial product that said, you know what, this is not taxable. I am, like I tell people in a heartbeat, I am not the financial advisor. And that's why I say gotta be a team effort. Because once the financial advisor and you tell me like, okay, this is what we're doing, then I can look at the tax things to see how it applies to that particular product that you're doing. So that's why it's very important to have team you, tax accountant, financial advisor, insurance person. All right. So who else?
For all the young people on the line, I just want to say that I guess for all of us older folks, basically, where we didn't have the option, we only had the IRAs where they were the standard IRAs, where now you have the option now of the Roth, where basically all the money that you're investing into the Roth is basically pre-tax. So when you do withdraw it, it's tax-free money. So that's something that young folks may want to, who are younger, then now that you have that option of a Roth, may want to look into. And again, talk to your tax accountant before you do that, and as well as talk to your financial advisor.
That was a perfect example. However, the only thing that what I want to switch to that is talk to your financial advisor first, because that's the person that knows everything, well, God willing, knows everything about those financial products. And then from there, you say, oh, by the way, Jamaal, he's recommending this and doing that. Okay, anybody else? Did that answer everybody's question? Okay, so Jamaal at J.S. Tax Corp, but also I do work for the Boyd Agency. So if you have insurance questions, I am learning from the master. I am not the master yet, but you know, I get all my information from the master. You can email me at jamalsolomon@allstate.com. If you want my digital insurance business card, Boyd2 36260. You know, I gotta talk to him about the 2. Maybe I want to change that to a 5. Maybe my line number. Look into that. And I have a great newsletter that's weekly and monthly. It's free. I really don't care that he's my client or not, but man, my newsletter is off the hook. I'm paying these people great money, so it could be off the hook. So just follow up with me. All you gotta do is just simply say, "Yo, Jamaal, put me on the list." I'm not gonna ask you no more questions. That's it. But like I said, guys, thank you very much. Thank you for the wonderful Q&A. I think we all learn from each other. Next week, I know I'm just not saying this because I work with him, but if y'all know me, I like to be very honest when I speak. And I'm just so amazed at Garland Boyd's knowledge of insurance. Like I always, every day, try to trip him up, say something outrageous, and then he just responds and just shuts me down. But it's like the ultimate learning experience. So do not talk about, oh, I'm serious about growing my assets, maintaining my assets, but you cannot take the time to listen to a 30-year veteran about how to keep that if that day should happen. Because floods, any type of situation, you can make all the money in the world, but what happens if your car get flooded, your house get flooded? It's gone. And because you picked a cheap product, I'm just being real with y'all, you lost your assets. Don't just think about yourself. Think about your family. That affects your family. That affects your neighborhood. If you have a product that you can't rebuild, that's affecting they home prices and all the other stuff. So guys, please don't say, Jamaal, I'm serious about asset protection and growth. And you say, oh, by the way, I didn't want to show up to the insurance thing. There's still time to do it. I will put my word on it that y'all will. Yeah, he knows a lot of stuff, and you're not gonna stump him. So have your Q&A ready for him. You know, challenge him, and we all gonna learn from him. So guys, thank you. Please spread the word. I think what we're gonna do with these sessions, we may most likely post it maybe a month or 2 afterwards, and so people can see this recording, and we can see the wonderful questions that Nicole Fisher asked us a couple of times, guys. So with that said, everybody have a great night, and God willing, I see y'all next week. All right.
Thanks a lot. Have a
All
good
right,
night, guys.
guys.
All right, cool.